Hello everyone, welcome to this video. In this video I'd like to talk to you about WeWork. Why? Because it's one of the most hyped as well as one of the most criticized companies of the past years. It's a company that has known great highs but at the same time also disastrous lows over the past years. And because of that, I think we should understand this company so much better to be able to do also so much better in the future. We should learn from it because it's a great business case of what not to do. But as you will get to understand in a second, I still think that WeWork also did certain things very well. And of course, those are also points to learn from. So without any further ado, let's jump into the topic, shall we? So everything started basically with the 2008 financial crisis. Of course, people got fired during this financial crisis, but at the same time, even though people were fired, they were still in need of offices. Think about the unemployed. People were looking for jobs, and of course, in applying for a job, you still have to do quite a lot of work. And people did not always want to do this at home because they were stressed. Sometimes they did not want to tell their family that they were unemployed, and sometimes they simply needed this environment of work. Then there's of course also increasingly this trend of distant work that's again further increasing the need for these offices that are not per se part of already a company, but are just places where you can sit down and work, oftentimes independent of a yet existing company. And so this is basically what led to the founding of WeWork as a company. The CEO back then was Adam Neumann, and he experiments with these co-working spaces because he thinks that perhaps this is something people need in this moment, in this period of the financial crisis, and there appears to be so much of demand for it that he thinks, okay, let's build a business around this. And that's basically how WeWork gets to be. At its core, WeWork still is a co-working space company. It offers co-working space, and on top of that, of course, also has some add-on primary services such as mail delivery, such as Wi-Fi, such as printers, and of course, drinks like coffee and tea. Some of these are unlimited, others you can consume and make use of until a certain extent, after which you have to pay per use. So even though this is what WeWork started to do, at a certain point it started to do so much more, especially at this point where it got $8 billion from this aggressive investor, infamous investor called Softbank. With this money, WeWork thought, okay, let's expand, but not only in terms of size, let's try to diversify and let's try to become so much more than just a co-working space company. At some point, WeWork even changed its name. I don't know whether you're aware of that, but at some point it was called the We Company to underscore the fact that it would be doing so much more than just work. So for example, it moved into co-living spaces as well, which was called WeLive. And then it tried also a private school, which was called WeGrow. Then it moved even further. It has this business that's called The Wing, which was basically oriented towards women and providing co-working spaces tailored towards women. And then on top of all of this, it tried to add technology to all of this, right? It already has this strong online, strong digital component to it, WeWork, because if you want to book a place or if you want to have access to some of WeWork's guides, they're all on the internet. But then it had these subdivisions that are more tech-based as well, like Teem, T-E-E-M, which is like this online scheduling platform where you can schedule your work and be basically more organized. And then it also tried this application like LinkedIn, but then for WeWork members, people that are part basically of the WeWork community. It started to get this community going through this application. Different than LinkedIn is basically that this application would be more towards solving problems related to work, and so it would not be just this another social media platform. So until now, I think everything kind of sounds okay. The business in doing all of this, rose all the way up to this $47 billion valuation as it filed its paperwork to go for an initial public offering. So it would become listed on the stock market. It did basically all of the proper preparations, because by listing itself on the stock market, it was trying to get additional funding from prospective shareholders. And a $47 billion valuation is not nothing for a company that's just going to be listed on the stock market. So why did it have such a high valuation? Well, because people thought WeWork would be the next Amazon. Amazon started off being this e-commerce company, but then transitioned into this encompassing huge platform. There's all of these sub businesses like artificial intelligence, gaming, cloud services, whatever comes to your mind, basically Amazon is doing it. And then people thought, why not WeWork? They're also kind of doing a lot with respect to housing, with respect to work, productivity, and it's also trying to add technology on it. So why not? But sadly, and that's of course the essence of this video, why I'm shooting it, WeWork ended up being a bubble that bursted. The valuation dropped from this massive 47 billion to way below the 10 billion mark. And the stock market that was basically craving for fast-growing technology stocks was wrong in case of WeWork. Sadly, the company did not turn out to be what investors, what the stock market wanted it to be. So then we get basically to the essential question of where did things go wrong, right? So there's a couple of important questions that are basically unanswered from an investment point of view, from a business point of view, and that basically hurt, of course, WeWork's valuation and future prospects. And on top of this, there are also these other points that we are aware of that have further hurt the company, particularly in terms of productivity and reputation. So first of all, the question is, what is this company's business model? Is it much more than just renting space, be it for work and for living? If that is the core thing, then there are so many businesses already out there that are renting, leasing, selling spaces. So do we really have to pay such a high premium for a company that's just renting and leasing places? Can it really be like an Amazon? Can it really be a technology company? Can it really be like how Amazon moved from selling just products to being like this Amazon ecosystem? Or is WeWork just going to be what it kind of always has been in its core, being offering spaces, be it for work or for living? And of course this leads to this sub question of where's the innovation and where's the technology in WeWork's business model. So most tech features, like this member app that I talked about, they did not really become successful. People did not really want it. There were already these other productivity suites, already these other applications that people preferred. And so, if your technology is not really getting off, if it is not really connecting with the members, then what is left that you really can scale as a business? Which basically means that how are you going to make sure as WeWork that your income is going to grow so much faster than your costs? So don't get me wrong, WeWork has a decent income stream, but its costs seem to grow so much faster, or at least on par, that it does not really deserve this amazing valuation that normally technology companies have, because a technology company can scale relatively easily, right? It's much less limited by property. It is basically able to scale through the internet, be able to launch its business in so many countries at the same time for minimal costs. But if you think about WeWork, it holds or leases property, and so this is a lot of costs. Think about maintenance, think about depreciation of your places, and think about stuff that can break down. Think of natural hazards. If that's the case, well, then why don't we prefer these companies like Airbnb and like Booking.com, companies that don't hold property but are also renting them, are also being basically this middleman between someone who is offering the place and someone who is demanding a place, right? So this is much more lucrative, one could say, because they don't have the responsibility for the property, and with that they don't have the costs for these properties that they're basically renting out, whereas WeWork does have it. And if it is not really able to increase the distance between income and expenditure, well, then you end up in questioning the business model and its valuation, and then you end up preferring companies like Booking.com and like Airbnb. So the next point on the list is the leader, the former leader, I have to say, and the company culture. There was not this friendly and supportive culture for its employees particularly. The leader did not treat employees well, and of course this went at the cost of productivity and at the cost of happiness. And then the leader also was this extraordinary figure who grew the company too aggressively, which is not per se a bad thing, but in the case of WeWork, we could say that he also grew it too recklessly. And then you see that you have so many spaces that you're not able to have high occupancy rates with, that you end up having property in places where people don't have demand for it. And in such a situation, then you see that your costs are really going to outpace your income. And then you have a problem. So think about WeGrow, right? One of the businesses I just talked about. Well, this business was already shut down in 2 years. And so the question is, why did you do it in the first place? Where did all of those costs go? Was it really worth it? The final point that I'd like to address in this regard, in this sub part of this video is, COVID-19 also hurt the company a lot. So the pandemic that we're currently in at the time of this video. So the pandemic, of course, keeps people away from WeWork's services and from WeWork's basically business, because people want to stay at their own place, they want to stay at home, they don't want to co-work and co-live. Simply because of the fear of getting ill. Even if they're not going to get ill, there's this psychological effect that most likely is going to linger on for quite some time. And WeWork was not really able to deal with this. It kind of did not expect it. Its property that it holds and that is responsible for was not ready for this. And if you have so much property that you at the same time also have to transform, well, then again, you have a big problem, a problem that Airbnb and Booking.com don't have. Getting to the final point, which is, I think, very essential here, is, so what is this company going to do now? So now what? And I want to start this section by saying that I don't think WeWork has a bad business model. I think the company did some great things, has still a decent income, has great prospects, but some serious corrections and changes have to be made. And I think that the new CEO is going to help with that, because I think he's more controlled, I think he's more conservative, and I think he's going to focus much more on the bottom line, on cutting costs, on regaining trust from investors and from consumers, and of course also on minimizing the impact of COVID. So one of the things that I think that have to be first of all done in the short term. Firstly, I think the growth of the company should be more modest. It should be more realistic, should be more careful. Only expand to those places, to those areas and those businesses that you think you can actually handle with your current financing, with your current funding, and with your current income model. Secondly, if there are inefficient properties, you need to get them out of your hands, right? If you cannot rent them, if you cannot lease them, then just sell it, divest it. Even if it is below the value that you purchased in the first time, the cost of maintenance and depreciation might become even more over the course of time. Just get rid of them and try to focus on the essential thing that you're doing, which basically means that any business that you're doing that's unrelated to your very core, get rid of it, because now it's not working, and it's either you're going to collapse because of the lack of investor trust and consumer trust, or you're going to make a restart, right? And the second is what you will try to achieve. So Teem and The Wing are two businesses that have been divested And you know, I already talked about WeGrow, which was basically this business that was already shut down in 2 years. And this is basically what has to happen. Businesses that you have need to have synergies. Synergy is key. If anything is non-synergetic, and if anything is a liability in terms of coordination, in terms of time, in terms of whatever cost, be it material or not, just get rid of it. Fourthly, redesign properties in such a way that they become COVID-proof. You need to get you need to get a hand on this situation, on the pandemic. The pandemic is going to be around for some time, and even if it is not going to be, the psychological effects are going to be, right? So vaccines need to be distributed, then you need to get a certain amount of people being vaccinated, and then, you know, on top of that, people need to psychologically be in peace with the situation that's again going back to normal. If that's really going to be the case, then great. But all of this is going to be taking some time. So WeWork needs to be able to live with the reality that at least the effects of the pandemic are going to linger around for longer. And if that's the case, you need to redesign your offices in such a way that you're actually able to give people the trust that they can come to your places, that they can co-live and co-work without actually being contracted with an illness from any of the people that they're co-working with or that they're co-living with. Final point here is, at least for the short-term things that WeWork has to do, is, they killed the IPO process. They delayed it, postponed it. I think this was a very clever decision, because now they can, focus on the company with much more calm, without having to explain everything to prospective shareholders. And when they're going in the future to the stock market again, they might get a much higher valuation, and with that, much more funding. So once these emergency moves, short-term moves are finalized, of course the company needs to look at, okay, how can I again fast pace my growth? And so how can I scale this business? The first thing is, you should not just think in terms of increasing the amount of buildings, but also think about how can I get much more out of each building. This doesn't mean that you should slice spaces, but think about productivity enhancement services that you can provide that is actually going to help people work better, faster, more efficient. Then if that's the case, there will be much more demand for your places, which will increase occupancy. But also perhaps you can increase the price that you're charging, the rates. And with that, if you can increase your occupancy and your rates, because you're not just offering a space, but you're offering a total solution for people who wish to work and wish to work better in a co-working space, well then that's great, and then that will increase the demand, and with that you can increase your rates. So design places for productivity enhancement. Secondly, don't be fixated on fixed assets, right? So think about turning your business into this platform that has technology at its center. Productivity in that sense is also one thing that's important, just as I just said, because productivity suites you can think about, right? Productivity suites, cloud companies, both of them basically can make sure that if you have partnerships with them, if you have deals with them, if you have alliances with them, whatever, if they join forces with you and help you really give this WeWork environment, and with that the WeWork ecosystem, the moment you get in it, you're really going to work better because basically WeWork offers you everything, well then that's great. And this is a very important thing that WeWork should be thinking about. Don't just think in terms of buildings, think about productivity enhancement, but much more than that, think about how you can scale the business through bringing technology at its center. The problem with cloud companies and productivity suites is, of course, that this has to come from the outside. So important is that WeWork also finds ways to grow from the inside in terms of being a tech company and infusing its business with tech. One example I have is actually the example that I gave before that didn't really work out. I really like this platform that was offered to the members to get problems solved with respect to work. It is technology, it's not a social media platform, it's something different. If WeWork can make this be the key of its business, then already it will have technology that's going to connect everybody in the WeWork membership, and it's going to lock people in the WeWork business and the WeWork experience, and people will continuously come back, and people continue to interact with WeWork people. There'll be much more reason to be a WeWork consumer than just the fact that there are some buildings that are only buildings, because then basically you could go to anyone and everyone, and then you're prone to imitation and prone to being substituted. I hope you enjoyed the video. If so, please don't forget to hit the like and the subscribe buttons. I wish you all the best in the world and hope to see you again anytime soon. Take care.